chairs are just sitting on right now.
Hello, everyone, and welcome to One Chair. As a reminder, none of what you will hear is financial advice, and this podcast is for educational and entertainment purposes only.
Hey, everyone. All right, so we had some interesting news from Jackson Hole yesterday, where Powell had his speech, and he had a very dovish outlook, which is great for markets. We saw everything pump. Price action on all fronts was great. I think the main point that was mentioned was that the 2% inflation target would be removed, and obviously that's a very strong sign due to the fact that that was probably one of the main reasons that they've been not really willing to cut rates, right? The inflation has been running a bit hotter than what they want. And so without this, I think the market really sees a rate cut coming quite soon. I think here it's a great news because before that sentiment was really bad on Bitcoin and on Bitcoin Treasuries in general. And as mentioned, we saw a quite nice pump on Friday, and that was actually quite needed when you look at the price action. So yeah, I don't know, Quentin, maybe you want to add a few things here.
Yeah, I think the 2% or getting away from the 2% inflation target is historic, and it was to be expected at some point. But it's still a surprise that it was so clearly communicated now this week. And just to give some background and history about that, this is why was the inflation target 2%, and this is coming out of New Zealand. 1990 Reserve Bank of New Zealand was the first to adopt this target and to indicate that in 1990, and the US took that over in 2012 under Chairman Ben Bernanke, and it has been this target since then, but it's there's no real scientific reason why 2%, why not 1.5 or 2.5, and so it's this imaginary target that the Fed has been trying to hit over the last decade, and now they removed it. And the interesting part is also that they didn't replace it with another one. They're not saying they want 2.5 or 3% now. They just removed it completely. So I don't know what this means, but it would allow the Fed to let inflation run hot, right? And this is kind of what Ray Dalio's point was over the last years in his books and his commentary on when countries that have too much debt, how can they possibly get out of it? So one would be austerity, spending less. But this is extremely unpopular with your voter base because people want more things. So you can't really win with that. Then the other is raising taxes, more income. And the US is kind of doing that with the tariffs, right? That's one way, but the most common one would be raising taxes, and this is also super unpopular, so that's also not an option. And the third, and what every government in the history of has always resorted to, is to debase the money supply, inflation basically, and that's what we're seeing here, right? That inflation targets being removed, and this probably means higher inflation for longer.
Yeah, absolutely. I mean, we saw the memes on X, printer coming soon, right? And I think it makes sense, and especially removing this last obstacle for them to be able to do that. And unsurprisingly, the market reacting how it did. We all know we've shown already this M2 money supply coming from the different countries, so Japan, China, Europe, and the last one that was missing was the US. And I think that was the first signal that they will be doing the same as we've all seen in history. Debasement of currency is the path. So yeah, nothing surprising here, I would say. It just took a bit longer than expected, at least looking at this year.
Now, what's important to note maybe is that historically when the Fed has started rate cut cycles, the market actually went down, but we'll see how it happens this time. You could argue that they started rate cuts already last year, and we did have the correction at that time in the markets, and it came back now. But there was a big pause now over, what is it, about a year now of no rate cuts?
Yeah.
And yeah, so did the rate cut cycle begin last year, or is it starting now? Is up for debate, I guess.
Yeah. It's a strange it was a strange year, I would say, because everybody expected a rate cut coming way earlier. Again, probably the inflation was the last obstacle, so that's why they waited so long. But essentially, if you look at it from this perspective, I would say, yeah, last year was when they started again the cycle of cutting rates. All right, let's move to our next topic that we wanted to discuss. So coming back and focusing on an MSTR, I think one of the things that we should show briefly is the daily traded volumes for STRC. A couple of weeks back, I showed a few charts showing how STRC is the main preferred that's being traded compared to STRF, STRK, and STRD. This time just looking at STRC over the different weeks. So 2 weeks ago, we had a pretty strong week, I would say, for STRC in terms of volume traded. And we see a bit of weakness over the last 2 weeks, right? Which is quite bearish in my opinion, because STRC is the main preferred that should be taking over in terms of ATM and also obviously generating cash to continue buying Bitcoin for strategy. There are some pops like on Monday, August 11th and August 19th, which is good to see. But in general, right now, the trend is poor. Maybe we should take it with a grain of salt, because also as mentioned, I think in the last episode, August is usually a low traded volume in general for the markets, especially compared to the rest. So what would be really nice to see for STRC is in September, it starts picking up again. So maybe we have another week of weakness in terms of traded volume. But I think it would be very a strong signal to see STRC trading back up starting September.
Yeah, I tend to agree here, and I think what is also a bit bearish currently is the price action around STRC. It was quite a big success. I would say at the start it was it started trading at $90, and quite quickly or steadily it went up to $98. So very close to the target levels of 99 to 101 that strategy has. And in that range, they would have had the opportunity to start issuing more, right? And buy Bitcoin with it. So they got close to that. But now with the bearish sentiment around strategy and MSTR crashing and all the preferreds crashing, also STRC was affected. It went down back down to 92 on Tuesday, and it's recovered since. It's back to 95, but with those prices, they don't have any ability to issue additional shares, right? And even though the trading volume is it's lower the last 2 weeks, but it's still way higher than all the other preferreds. But it doesn't really help strategy currently, because they're not able to issue anymore. So I think for me, this stretch product is. Saylor mentioned that it was his iPhone moment, and the iPhone also took a while to really be established in the market, and Apple stock didn't rise the day the iPhone was unveiled. So we need to give it a bit of time, but I think it will be important for Stretch to reach this $100 mark and show some stability there for a while for this product really to start being successful. because now it's it's a bit worrisome. But again, it's only been a few weeks that it's trading, so too early
Yeah.
to say.
Yeah, no, absolutely. So first, it's been only a few weeks. We're still showing this because I think it's interesting to have a look at how the product is trading, right? However, the month end is approaching, and that's when strategy and the management team can decide to hike the dividends. And I think that's what's going to happen this month, right? In order to bring the price up to 100 as quickly as possible. And yeah, probably in 1 week, we'll have clarity on what's their dividend strategy here for STRC. Because then once it's at 100, and the quicker they bring it, the faster they can also issue more STRC preferred equity out in the market, and that just helps the whole balance sheet overall. So yeah, I think the next point to look out for STRC is the end of the month to see by how much they raise the dividends.
They should announce it next Sunday, 31st of August, last day of the month. What will be the dividend for the coming months? And we've briefly showed that in a few episodes ago of what their mechanisms are to stabilize the price. Since now it's under $100, they would increase the dividend, and they don't have a limit to how much they can increase the dividend, right? So it will be interesting to see how much they decide to go up, assuming the price stays relatively stable now over the next week. Do they hike 1%, 2%? Or are they going to be a bit more conservative here? Because on the way down, they are restricted. They can only reduce it by 0.25, so 25 basis points per month.
Yeah, I mean that's my big question, because they could also crank it up. I mean, maybe I'm exaggerating, but 5% just to have the big surge and also be able to start issuing shares so that it stabilizes at 100. Because if they crank it up at such a high level that suddenly the people start piling on to buy that, then obviously the price will rise above 100 very quickly, and that's where they start issuing. So yeah, very curious to see what type of dividend strategy they really start with, and yeah,
And what the market currently views the correct dividend payment or the fair dividend payment to be, right? Because I think for me, while it was very surprising and good that strategy was able to increase their IPO volumes by what was it, 5 times? They wanted to issue 500 million of stretch, and they ended up issuing 2.5 billion.
yeah, could be. They issued 2.5 billion for sure. I don't remember what was the initial offering, but
I think the initial was around 500 million. So
yeah.
so they massively exceeded the expectations. But at the same time, the deal was made at $90. So I would imagine that it's a no-brainer to invest as much as possible if you have the company announcing that their target is to have the instrument at $100, and you get a deal at 90. So it's more than 10% of free money, basically. So maybe that's also why this was so successful to start with. And now the dividend payments will need to be adjusted up to actually get to this 100.
Yeah, absolutely. Yeah. I mean, last factor as well that we need to consider is that now seems like sentiment is picking up based on what we just mentioned on the Powell speech yesterday. So probably the price will start rising, hopefully this week, without having to hike anything, and maybe strategy doesn't need to hike so much the dividend after all to reach this $100 price on STRC.
Yeah. And this is sentiment is important still. We're seeing that we've seen some interesting takes on X by the MSTR North, True North crew about the fact that all of the preferred price also went down significantly over the last week with the MSTR bearishness. Also, the preferreds came down in price. And this is not, if the market was efficient and rational, this would not necessarily happen, right? Because on the preferreds, you still have the same interest payments. Since Bitcoin didn't really move too much, also don't have much bigger risk in terms of repayment of in terms of a bankruptcy of MSTR. So nothing really changed on the preferred side, but the price went down anyway. So that's really shows that it's sentiment driven, all of the strategy products today.
Yeah, I think the market still needs to understand these products properly, because when you look at how the price action happened with the sentiment, and that clearly shows that the market does not understand these products as they should. And as you mentioned, it's all purely sentiment driven, based on probably the price action of Bitcoin, because I think that at the end of the day, that's what mostly drives the preferreds more than actually the MSTR share, because we've seen days where the common stock was hammered and the preferreds were doing quite well or being stable. But when the Bitcoin price goes down, that's when the preferreds actually start moving with Bitcoin, which actually makes some sense.
This makes sense, yeah.
Makes sense, yeah. But still, if the market was a bit more rational, in my opinion, then the preferreds would have to see a lot less movement on the price action, because again, strategy is over collateralized, or what is it, 9-to-1 more or less on this. So the preferreds that are on top of the capital stack, you shouldn't care so much about the movement, because even if it drops 75% or 80%, you're still backed by Bitcoin.
Yeah.
Which brings us probably to the next topic I actually wanted to also talk about maybe a bit further, was the ATM guidance that was changed on Monday. So we already discussed it a little bit on the previous episode, but I think here there's some additional thoughts, and I don't know, maybe continue. You want to kick it off first?
Yeah, I mean, after thinking about it for another week, I said already last week that I thought it was a bad sign that they did it. I still think they made a mistake overall. Probably the mistake was more to issue the guidance in the first place. So I think this back and forth is just not good. It brings a bit of uncertainty into the markets and for MSTR investors. So because now you don't know, are they going to change it again in a few weeks, or what's going to happen? So I think the mistake was more on the side that they issued the guidance in the first place. But again, this is such a new concept with the MNAV and what they're doing. They're at the forefront of this Bitcoin Treasury strategy. So they have to try things, and sometimes it works, sometimes it doesn't. Sometimes they see that they make a mistake, and in that aspect, I think it was good that they changed course right away and didn't wait for too long if they saw that it was a mistake. So overall, I think it gives the company more flexibility now to still issue shares if they see that it makes sense for them. And I think we'll have to wait and see over the next months what does that mean exactly, because the MNAV is clearly under 2.5. Will they issue 500 million a week again, or will they be more conservative with their issuance? Will they not issue at all? So it just gives them the option to do it now, but it doesn't mean that they will be very aggressive on the ATM if the price is under pressure. So we'll have to see.
Yeah, no, I tend to agree. Like as mentioned, when it came out, I had mixed feelings from the very start. I also think it's a mistake, and I think overall just the whole guidance concept, because even now with the wording, they have so much flexibility. In my opinion, it also almost means anything really. So what's the point of having guidance? At the end of the day, it's just confusing people more than anything, and bringing this negative sentiment on some of the mostly retail investors, I would say. And yeah, it's a bit unfortunate also with timing. I think it was exactly somebody from the True North crew that said, yeah, the timing was awful, and I tend to agree. So probably I don't know if they now should take it back, but now that it's out there, they probably that's why they had to pivot fairly quickly. But let's see. Probably the market won't even remember this guidance in 2, 3, 4 weeks time. So not even sure if it's worth really overthinking about it.
What the market will be talking about is the S&P inclusion or non-inclusion that we'll know about in the next few weeks. So
Yeah,
this
exactly.
is the next big thing.
Yeah,
for
S&P
strategy.
inclusion. Okay, should we switch to our last topic of the day?
Yes, let's talk about Intel.
Intel. Yes. So maybe just to put a bit of context. So also coming from the news on Friday, yesterday, the US government acquired 10% of Intel. They acquired it for a price per share, I believe, of $20.47 per share. And the share was trading during the day roughly around 24. Overall, it was, I believe, a 17% discount. And the acquisition was made for a total of $9 billion or $8.9 billion. And looking into it a bit deeper, looks like they did this through actual grants that were already allocated to Intel. Already, some of them back from the Biden administration. So those were already from a while back. And yeah, so this was a deal that was done between Intel and the US government. Obviously, quite a lot of questions around that, because why would the US need to take over partly a private company? When I look a bit and dig deeper, it feels a little bit like a semi bailout of the company. I'm not quite sure what went, but I'm sure we will hear more over the next few days. And yeah, so maybe to bring it back to the Bitcoin Treasuries, right? Because this is a risk that we mentioned already a few episodes back. We haven't talked about it quite in a while, but at least in my opinion, the biggest threat to a Bitcoin treasury is a 6102 style confiscation or nationalization of the Bitcoin from a Bitcoin treasury, right? Because it's a honeypot. As mentioned, strategy is already way ahead of many nations. So it's going to be one of the biggest entities in the world. And if you want to catch up as a government, especially the US, who haven't even started buying in a budget neutral way, as they put it out, then they need to catch up somehow. Strategy right now is probably bigger than the US government. And they're competing with the US government through the type of products that they're selling. So yeah, this precedent on the Intel side could give us some hints or insights on how the government could take over potentially a Bitcoin treasury, right? So I don't know, maybe I'll stop here briefly and let Quentin give his inputs on this.
Yeah, I'm not sure. I think it's an interesting take, and yeah, nationalizing a private company. I don't know why they did it, but on the other hand, it's smart from the U.S. government. That's what I see, because there were grants that they would have had to pay anyway, and now what they did is basically got equity out of it, and will make some profits if the company is successful, right? So it's kind of an investment in this company, and they take part in the upside if. But they paid for it, right? And nationalizing and or confiscating the Bitcoin of a Bitcoin treasury company would mean that they just take it over, and I think that really would be an additional step, and it would be a very bad precedent for any company that works in the US, right? And could potentially mean an outflow of companies into other markets. And I don't know if they would go that far, because it would mean that no company is safe in that specific jurisdiction. And it's the Intel deal is a bit different because they actually paid for it.
Yeah, no, I see what you mean, and I agree to some extent, right? I don't think it's going to happen tomorrow, but what we've seen in history is that it always starts with those small steps, and then it gradually gets bigger and bigger. So for me, this is definitely a sign. Let's see if we see a second type of similar process. in the next couple of years. But as these steps get bigger and bigger, you reach a certain point of really a turning point. And yeah, there's so many evidences from history of this happening. So that's one point I wanted to mention. The second one is obviously for Intel, as mentioned, it feels like a very small bailout or some sort of bailout. And then that got me thinking as well, right? What if suddenly you have those Bitcoin treasuries that get in trouble? Their MNAVs are compressed. They're maybe even trading below 1. Why wouldn't the government actually just step in and say, hey, I'm willing to pay you this much for taking over a part of your company or the whole company, and kind of bailing you out so that you can keep on doing what you're doing. But now suddenly 50 or more % of the ownership is from the government, and that's something that could happen, right? Because we always pictured a concentration, one Bitcoin treasury taking over the other one in a bear market. But what if the government does it as well? That could be also an outcome, and then the government suddenly getting cheap Bitcoin, and I don't know, maybe they even have some deals and make it a budget neutral way. I don't know if there's some grants for some reason, and they're able to do that. So that now raises a lot of questions on my end. And again, I think that this is why I see it as the biggest risk, and I'm not the only one. So lately, I've heard a lot Preston Pish, Willy Woo, and others come out with these types of discussions, because look at what's happening, right? So yeah.
Yeah, and I think this could happen. It makes a bailout, but the bailout sounds different than we'll just take you over, right? And but also the other could happen. So you never know with governments. But it would be a way for a government that decides that owning Bitcoin is important to get a lot of Bitcoin without moving the price.
Yeah.
So
Absolutely.
that's an interesting aspect.
Exactly. And I thought, oh, it's good for the investors, but not necessarily, right? Like we saw in this deal with Intel, they got a discount on their shares. So potentially it could happen the same for a Bitcoin treasury company, right? So if you think that you'll be able to sell your shares at a higher price to the government, maybe you're wrong. So that's a risk that needs to be considered. So even if you say, oh, there's a sovereign put on my Bitcoin treasury, that put might not be as valuable as you think. So maybe take that into consideration in your risk framework when you start investing in a Bitcoin treasury company as well. So yeah, these are, it's interesting because again, this is evolving and that's brand new. And at least for me, it just raises the risk in terms of this risk in when I look at Bitcoin treasuries.
Okay, that's all we had on this topic, and any topics for today actually. So we can move into final thoughts. Yves, on your end?
Yeah, I mean, just one thing I think that I take especially from Friday. I think sentiment might be shifting finally to the positive, and I hope we keep that sentiment throughout the rest of Q3 and Q4 2025. So yeah, I do believe that this is the turning point. I actually just had a post on X during the week where I mentioned the Big Short for those who have seen it. And there's this moment when there's Michael Burry sitting or even laying on the ground in his hedge fund office, and that's probably the bleakest moment of the whole the movie, or the low point. But that's exactly just when things are about to turn, and I think that's where we were this week. So that's my anecdote for today's episode.
Very good. Nothing to add to that. So thank you, everyone.
Yeah, thanks for listening.
Next time.
Cheers, everyone.
How many chairs are you sitting on right now?